Hey, how's it going, everybody? So, I'm gonna take a look at the U.S. dollar and the currency market, how the U.S. dollar is influencing the currency market because of its recent downtrend. So let's start with the overall picture. Here you can see on the weekly. This is this is it. This is very weak. Uh, there's a very possibility because it's all the way at the end of the U.S. dollar risk range. Very likely it can turn around from here. Uh, but in terms of sentiment, um, based on the chart, it's looking very bearish. If uh, if I had a position here, from here or here, I would be taking some profit at this point because it's at the end of the lower risk range. Um, just to be just to be just to be careful, cautious. Uh, so let's look at the Euro USD. The Euro USD right now. Uh, Let me just go over quickly. It had a very long-term bearish market uh, since 2008. Uh, Now, in my opinion, this this market has bottomed since 2015, and it's been consolidating, and it made an attempt once, and this is the second time to get out of this um this this multi-European market. Now, last time it didn't succeed. This time, on a monthly chart, it looks like it has broken out. Um, so we're gonna have to just wait and uh, wait for the move to be confirmed. It might take a month or a couple of weeks. Um, let's see on the daily. On the daily, you can see there's a nice consolidation. Uh, Here, uh, this 2000, this one a $1.17 is a very important price. I'm gonna show you why on the weekly chart. The $1.17 has been tested here. Has been um, tested here twice. Once, twice, right? Tested one, twice, three. So this is the 117 is very important. Now, if the market doesn't get out in a couple of weeks and break out to the upside, it will come down here, 115. And if it still doesn't have the leg to go up, it will come down all the way to 112. This area right here, 112. And after that, it should go up. Now, if it doesn't go up from here, from 112, and you will going to see euro dollar going back to the range between 106 to 112. 106, that's what it's gonna hover around uh, for the foreseeable future if it doesn't. Uh, but since there is a lot of problem in the United States, uh, policy making in the United States, um, politics, as well as the economy is not going so well right now. So, and we don't know how long this is gonna last. Uh, the Federal Reserve did not say when they're going to start raising rate, and I'm thinking this might take 2 to 3 years. So if that's the case, I don't see euro coming down here. My guess will be euro going upward and breaking out of that yearly multi-year trend. Okay, so look for that. I mean, my bias is towards euro breaking out of this whole downtrend. That's what I would look to play. If I do decide to play it, but at the same time, you have to be careful because it tried to break out here. This might be a false breakout, so you gotta be careful. This is a very important area. I mean, if you want to be safe, you want to see the euro break out to the upside, and then wait until it retests, and then you can start positioning if you want to take on this trade. So that's euro US dollar. What's next? Okay, US dollar Swiss franc. So US dollar Swiss franc has been on a very nice consolidating pattern. It has a very definitive kind of a risk range from $1 2 cents to 87 cents. So it's a pretty nice risk range. You could easily trade this when it hits the upper end and just sell it, and then when it hits something closer to the lower end, you buy it. Okay, that's the simple way to trade the U.S. Dollar and Swiss franc. Now, if you were bearish on the dollar, you could have short the U.S. dollar and Swiss franc pair and made quite a bit of profit. But right now, let's go take a look at the weekly. Right now, Swiss franc is at the end of the lower end channel, so I would be cautious here. Even though again this thing looks really bad, most likely it will go down and hit this area, the blue line right here, 87. This is where it's gonna hit. It looks very bearish. It's going to hit here. Now if it doesn't, if something changes in the fundamentals, some news comes out, you want to look for the USD Swiss franc to break out to 94.80 with a good volume, with a good velocity. You want to see that to break out. I'm sorry guys. Okay, so you want to see this to break out of this line. Now if you don't see it, then if you see a very weak retracement, most likely it will come back down all the way to 88 that I showed you on the monthly chart. If you want to trade this pair right now, if you wanna, like, you could trade it either way. In my opinion, you could buy it here if you want. If you think the U.S. dollar is going to appreciate against the Swiss franc, you could buy it here, and then you could buy it here. Okay, these are the two places you could take a shot. Now, if you think if you think the Swiss franc is going to strengthen against the U.S. dollar, then the best way to do it is you can short you can short it here by selling the Swiss franc against the US dollar. In other words, you buy the Swiss franc against the US dollar, and then if it goes against you, you could try it here. Okay, you could try it here, somewhere here. You could try it here. So that's that way I would trade that, the USD Swiss franc. Um, but right now, based on what the way I looking at things, most likely it will go down to 88. That is the sentiment of the market, because the momentum is still downward. Okay, and I haven't seen or well, we have to wait to see if it challenges the 93, 94 price. And then lastly, let's look at the US dollar, Canadian dollar. You're going to see a very nice long run for the US dollar against the Canadian dollar, and it's still in the bullish trend. Okay, still within the bullish trend. Now, for the last couple of years, it's been trading between 122 to 142, 145-ish. Weekly chart. I look at the weekly chart, and it seems to me that the US dollar versus US dollar versus Canadian dollar, Canada has been winning. Canadian dollar has been winning. So this is a pretty strong line. This mark right here. This pattern is pretty strong. It's been tested once, twice, 3 times. It's the 4th time it's been tested. If it breaks, it will most likely go all the way to 128. So you have to be cautious on this trade. If you have bought Canadian dollar, in other words, if you sold this pair, you wanna take some profit here. You wanna take some profit here, and then if it goes down, perfect. You still have a good position left. Look to get out here, and then if then we see how the USD CAD basically reacts after it hits 128. If it consolidate, you take your profit out, you sit down and you wait for the next move, because from here 146 or 140, this was a good nice a nice move. So I wouldn't be too greedy from here on, unless you have a real good conviction, unless you have a really good reasoning why you think the US dollar going to weak even farther against the Canadian dollar. Okay, so that's my 3 currency pairs that I'm watching, and what I think about the charts of these 3 pairs. Okay, have a nice day.